Good morning, togglers. Today we're going to take a look at why U.S. foods could rally as much as 8.5% over the coming weeks and months, and all of that driven simply by the finally turning around of its fortunes after a relatively lengthy sell-off here. So let's take a look at this inside here. We're going to take a look at what the inside itself is actually saying. So very importantly, there have been 18 similar occasions where Toggle has noted that there's been an improvement in terms of the bouncing off of the lows here after a prolonged sell-off. And historically, across these 18 occasions, the median gain was about 11%. Now, we already rallied a little bit over this last day. So the target price would be 37.65, staying, of course, within this horizon, potentially extending the rally all the way through 40. And then on the downside, not to go below 31.98. That's the red line at which you reassess your position. And if it goes below it, assume that there must be another driver that's actually driving this stock price rather than the fact that the thrust was quite positive. Now, why might it move? This is what I was discussing earlier. So effectively, you can see here, this seems like a little bit of a technical definition, but really all it says is that in the last week, the stock moved up more than what the typical range of volatility would have suggested. And it basically means that actually probably a larger number of buyers saw that this was an attractive entry point to get into this, possibly because the stock has been in this upward trend. And so this was just a retest of that trend and now potentially could bounce back. Now, on the past performance, you can see that actually the majority of those incomes were strongly positive. However, there were a few where the stock continued to decline and lost almost, in fact, more than 10%. So again, that red line in the projection chart is quite important. You really do need to manage the downside. Nonetheless, the risk reward does look relatively compelling. It's probably a 2-to-1, 3-to-1 type risk. So much for the US Foods Insight today. Hopefully put it on your radar screen. But the daily brief, which should be in your mailboxes already, is also going to discuss the labor market situation in the US and what that might mean for the economy. And if you don't receive the daily brief, you can do so by just going to toggle.global and sign up there. We try to provide a fresh market relevant content whose only aim is to spark an idea and perhaps highlight something that you had not thought about before and initiate another interesting investment thesis. Otherwise, like this video, we do them every day, or like our YouTube channel. The goal here is to break down that barrier between the vast ocean of fundamental and price data out there and really help you map what those data points might actually mean for things you care most about, which is holdings in your portfolio or stocks on your watch list. We appreciate your giving us your attention, and we'll see you again tomorrow. Thank you.